Hey, how's it going, guys? It's your boy Josh Cashflow here again, teaching you guys how to make the bag. Listen, today we're gonna get into options trading. Options trading. This is how I make my bread and butter. This is how I built my career. This is what I do: trading options day in day out to travel, have fun, pay bills, the whole enchilada. So I'm gonna be giving you guys step-by-step beginner's guide how to make money, $500 to $1,000 a day trading options, skipping all the fluff, getting straight to the gems. Let's go. Okay, guys, as you guys can see here today, I'm going to be teaching and talking about how to make $500 to $1,000 a day trading options. Okay, before we get into it, guys, I'm going to show you guys the proof. Okay, the proof is in the pudding. This is today, March 27th at 6:48 p.m. military time. It all lines up. Okay, and you can see I made $760 today trading options, guys. SPX in all about an hour. Okay, my first trade was at 9:36. I got out of my last trade at 10:45 a.m. Eastern time. So in about 1 hour, I made about $760 trading options, guys. Okay, so I'm going to teach you guys exactly how to do it. So come back over to the screen and let's get into the magic. Okay. First thing I want to tell you guys is that there's going to be no boring language in this video. We're going to go get straight into the gems and what you need to know to make money trading options. Number two, guys, what is actually options trading? Well, options is a derivative. What does that mean? Okay, options derives from an underlying asset, and that asset is a stock price. Okay, so for example, Tesla has stock options, Microsoft has stock options, Google has stock options, okay, and so on and so forth. Okay, and it's used to either predict which way the stock is going to go, either up or down, and is also used as insurance or a hedge against loss. Okay? So, for example, if you have $500,000 worth of PayPal shares, you can buy put options on PayPal. So, in case PayPal does go down, the option actually protects your value. Okay, you're actually making money as the stock is going down. So, I've done that actually. I've protected a lot of my stocks with options as well. Okay, but options is kind of like doing layaway, guys, like putting a couch or a piece of furniture on layaway. I'm going to get to that in a second. Just stick with me. I'll explain what I mean by that. Okay, but then you guys need to understand, it's very simple. To make money with options, if a stock is going up, you buy call options. And as the stock goes up, you make money. If a stock is going down, you buy what? Put options. And if the stock is going down, you make money. So you pick up the phone on calls when it's going up, and you put the phone down as the stock is going down. That's how you make money with options, guys. Okay, and as the underlying stock goes up or down, the derivative, the options contract, also goes up and down. Okay, it's exactly like layaway, guys. And the great thing about options is you can only lose what you put in. So if you put in $200 into a trade, the max you will lose is $200. If you put in $500 into a trade, the max you will lose is $500. This is one of the advantages of trading options over things like futures and stocks and things of that nature, because you have a limited risk based on how many contracts you are buying. Okay, so like I said, guys, options is like layaway. So let's kind of roll with that example. Okay, let's say you have a couch you want to put on layaway, and the store owner, you haggle back and forth, and he tells you, hey, let's agree on the price. Okay, that's your strike price. He's gonna sell you the couch for $2,000. Okay, so that's your strike price. That's the price you agreed on for the couch. Okay, number two, he's gonna ask you to put a down payment on that. Okay, in stock options land, that's called a premium. Okay, kind of like the premium for your insurance. Okay, your down payment is your premium. Okay, so for an options contract, you're paying premium to control a lot of shares. Number three, contracts. Okay, you write a contract based on the couch, the payment terms, etc., etc. In options, each contract calls and controls 100 shares, and it also has an expiration date when the contract is going to expire. Let's actually go into the chart and I'll show you what I mean. Okay, so if you go to the trade chain or the options chain, on the left side is calls. You can buy calls. And on the right side is puts. You can buy puts. So I can go to Apple And if I wanted to buy 100 shares of Apple at close, for example, you will see that it costs $158. Okay, times 100, you're costing out 15 grand to own shares of Apple, about 15,800 to be more precise. Okay, but with the options, guys, you can control 100 shares of Tesla for $1.15 per share. And since each contract sells in 100 bundles, $1.15 times 100 is $115. So this call contract is going to cost you $115 to control $15,800 worth of Apple shares. This is the beauty of options. The down payment is so low. And as the stock goes up, your premiums begin to increase in value even more than the actual stock itself. So let's use the couch layaway example. Let's say your couch is on layaway, okay? And now that couch, for some reason, is worth more. Okay, let's say it was owned by a famous person. Now that couch is worth $10,000 instead of two. Your down payment for $200, somebody will come along and say, "Hey, I will pay you $700 for that same layaway contract you have. I'm going to take it off your hands. I'll give you the $700." So what happens is you take the $700, okay, and you make money on your down payment. So you put $200 down. You were given $700. You netted $500 only with $200 out of pocket, and the other guy gets to finish making the layaway payments and own the actual couch. That's exactly how options work. You're just exchanging down payment from one person to another. Okay, and somebody can actually cash out that down payment and finish buying the actual underlying stock or assets. Okay, so that's what I mean by leverage and derivative. So with options, you're making money when the stock is going up or down with calls or puts. Okay, another thing I want you to understand. Okay, since the actual market itself is an auction process, since the market itself is based on derivatives, the way you make money with options is understanding where the market is going, participating, and joining it. So if the market is going up, you want to be in calls. If your stock is going up, you want to be in calls. If your stock or the market is going down, you want to be in puts. And the way to know that is to understand the market as a whole. Because guess what? The market is an auction process, and there's two ways to understand it. The first way is technical analysis. So no, I don't mean like you have to be a techie geek or anything like that. It just means the study and understanding of charts, patterns, and historical data. Or fundamental analysis, which means you're going to become a guru in financial reports, company health, valuations. That's for the birds, okay, guys? I barely use fundamentals. Maybe 10% of what I use is fundamentals, or 20%. 80% of my trading is technical. Why? Because with options, I'm in these trades for minutes a lot of times. 5, 10, 15 minutes max. I'll give you an example. If we go back to my chart, okay, for today, you guys can see that on this trade, I got it at 1040. I got it at 1045. That's 5 minutes. And on this trade, I made about $670. Okay, on that trade alone. Why? Because of the fact that I use technical analysis, not fundamentals, and I was in and out because I knew what I was looking for. Okay, so hope that makes sense. The market tells a story. You, as an options trader, need to understand the story so you can be on the right side of the market. Calls when it's going up, puts when it's going down. And by market, it can be the actual market itself. It can be a stock like Tesla, Apple. I'm just using market as a figure of speech, okay? I mainly trade SPX and SPY. So that's just a pro tip for you guys. That's what we call a clue, guys. You maybe want to write that down as you practice and you learn how to trade, okay? So the market is actually an auction process. And what does every good auction need? You need a buyer, that's you, a seller, that's also you, and an auctioneer, that's the market maker. Okay, the reason why I say the buyer and the seller is you is because you're buying your calls and puts, and you're also selling your calls and puts to take your profits, hopefully. So there's millions of people buying and selling calls and puts in any given day. Okay? And if you're on the right side of the trade, you're going to make money. Okay? Time of sales is actually a representative of this. And if you look to my right, there's actually a picture of it right here. Okay, where there's actually on the left side is the time, and the market is giving the prices, and on the sides it's telling you how many people are buying contracts, how many contracts are being bought at that particular price. It's kind of like the auctioneer saying, "I got Tesla for 100 or 100, 100,000, 200,000, 200,000," and people are saying, "Hey, I'm going to buy it at that price." That's what that looks like in the market. It comes as a number. It's called time of sales. Okay? But if you can understand the story that the time of sales gives, as well as historical data, you can then have a pretty good idea where the market is going to go and make trades based on that decision. So, for example, if it's been raining for the last week and a half in your city, okay, and you look outside today and it's cloudy and it's wet outside again, more than likely you're going to take out a what? An umbrella, right? Because you're making decisions based on historical data and patterns, keyword, that you've seen, okay? Same thing with trading, guys. We're looking at patterns, analyzing them, and making trading decisions based on those, okay? So it's a story that you need to understand, and that story can be understood in three ways. Number one, you can understand the numbers, okay? Which means you read time and sales, and you're some type of Einstein, you can look at all those numbers and form a picture in your head. That ain't me, guys. I wish it was, but it's not me. Number two, you can understand pictures, guys. Pictures, the market forms pictures that you can see and identify and make trades based off of. And number three, you can make trades based on patterns, okay? This is one of my favorites, patterns. The stock market moves in such a way where it makes patterns for you to trade. There's an old saying among traders. It's the market loves structure. The market loves a certain structure, and when you can understand the structure, price action is what we call it, how price moves up and down in a relative day, you can then become an excellent trader. So the art of trading is to be able to understand, predict, and take action based on the story the market is telling you. And all these things to the right are certain patterns. Guys, don't feel too stressed. I'm going to break down very simple patterns that we use, okay, to trade options very simply. Okay, and it's all about understanding price action, guys. One thing I want to show you guys is the market is not gambling. I hear that a lot, okay? Is the market gambling or is it science? Guys, if you trade the right way, you're not gambling. It's science. How do I know that? Well, number one, gambling by definition is a game of chance for money, a bet taken based on hope. When trading, we are not hoping, guys. If you're hoping a trade is going your way, you're in the wrong trade. Trading should always be based on strategy. Okay? We focus on statistical significance, which is a big math word for saying out of 100 times, if something happens 80, 90, 95 times, it's reached statistical significance, which means more than likely it's going to happen again. And when you have statistical significance of something, the more than likely it's going to happen allows you to trade based on that action. Okay, and that's where we form setups. Okay, setups is tested hypothesis on a way to trade on a particular market structure that lets us know, like, hey, I've seen this before, and this happened. So if I take a trade, the same thing should happen again. If you do that, that's called testing a hypothesis and trading based on strategy and not guessing. I'll give you an example, guys. I'm going to go to the chart right now, okay? One of the patterns that we trade a lot is the letter H, okay? And when we see the small letter H, it lets us know to get into puts. And a lot of you guys in elementary school learned what the letter H is. Look at this. This is that's the line for the H. Then you have the curve right here. You guys see that? That's the curve for the H right there. Okay? And when you see that, guys, that's a sign to get into puts. And once we break the H, guys, we get into puts because usually the market is going to go down. And boom, there we did. We headed down for 15 more minutes, for about 5 to 10 more minutes, as we were going down. And we kept on going throughout the rest of the day. okay? While all because I was able to recognize the small letter pattern H in the actual market. And that's what I mean by trading. If you can understand the structure, if you can understand the setup that works over and over and over again, you can make money based on trading, okay? But here's the thing, it has to be a hypothesis that's been tested over and over again. You have to have traded that setup over and over and over again and seen that it works. But luckily for you, your boy Josh got you. I'm going to show you guys something that I've already tested. And guess what? You can just borrow. One of them I just showed you guys is the H, okay? Another one, favorite of mine, is the bear flag and the rally base rally or drop base drop, okay? So I'm going to link a video somewhere here to the rally base rally or drop base drop video where I'm trading live and making $500 in a few minutes. Okay, you guys can go check that out. Okay, but in this video, I'm going to break down the bear flag, how to easily get in, get out, and make your money, okay? So the bear flag just follows the flagpole, guys. Okay, so what you want is a downward move like this. Okay, so there's the pole of your flag. So imagine the American flag. That's the pole of your flag. Let me remove this. Okay, and there's the flag banner itself. And how I'm drawing this, guys, is I'm just drawing the line that's touching multiple points, where the chart is touching multiple points. One, two, one, two, three, at least 2 points on each side. And that creates a channel, or in this case, a bear flag for trading. Okay, and when we break that flag, if we break it downwards, we get into puts. Like we could get into puts here. And we can ride that all the way down and take profits for 3 to 5 minutes, get into the trade, maximize our profits, and get out of the trade, right? All by trading the bear flag, okay? So there was an H and a bear flag, all showing downside moves today on Apple, and we got it and we made money. On SPX, guys, which is what I traded today, here's another bear flag right here, okay? This is actually a bear flag I traded. We have the flagpole down. I drew the channel, okay? We broke it. I got into puts around 10:20, 10:30, and I wrote it down in a few minutes. And if you look at my trading, look at the time. I got into the trade around 10:30, 10:32, took profits at 10:34, got into another one at 10:40, took profits at 10:45. All within a 10-minute time frame is where I made really most of my money. Why? Because I saw my setup, I identified it, I then executed based on historical and significant history of a trade working out over and over and over again. And that's what I mean by statistical significance. So, guys, this is a beginner's breakdown of how to trade options, what it means, what it involves, okay, how to trade it, and the setup that you can use to make money. I actually showed you two. And plus, guys, the RBR video or drop base drop video of me making $500 in a couple minutes is there as well. And other videos on my channel are actually trading options, making $1,000 in 10 minutes. You can click that and watch that somewhere here as well. So I hope you've learned a lot. This is Josh. I'm going to teach you guys more and more how to make money, how to get this bag. What I want you to do, guys, follow me on social media, Instagram, TikTok, YouTube, all at Josh Cashflow. But more importantly, guys, I'm going to show you guys why it's great to follow me. I told you guys I made $760 today. I posted it on my story exactly how much money I made. Hey. For those who don't know, I'm a huge Afrobeats person, guys. So I posted my profits on my IG, and I usually post my profits daily so you guys can see my wins, okay? And those of my students, okay? And I hope you guys are successful in your trading. That's how you make $500 to $1,000 a day trading options. And I'll catch you on the next one.